Yo, what is up legends? My name is Vickers and welcome to the Wick Trading channel. Now today's video is going to be split into two parts. Firstly, we're going to analyze the charts as we always do, and secondly, we're going to have a look back in the market to see what I did wrong, what I did right, and what I can learn from the market for the trades coming up. As always, I would like to thank you for clicking on the video, but please do me a favor, click on the like button, click on the subscribe button, as well as the bell notification to be notified when I upload more videos to YouTube. The amount of likes that I get plays a massive role in the optimization of my videos for YouTube to put it out for more people to view it. But once again, before I take too much of your time, let's get straight into the market. Okay, so before we go into analyzing the charts for the week ahead, let's have a look at two trades that I did right, two trades that I got wrong, what I did right and what I did wrong, and what we can learn from the market for the coming trades ahead. Now, I took two random trades out of my account history so that we can look through it. The first, the 27th of July, that I took a buy and I got a profit of 1,050 pips. The second one is the 6th of July, where I made 1,240 pips profit. And then two random losses. The 20th of July I lost 370 pips, and then the 12th of July where I lost 350 pips. So let's get straight into it. I played back the market to the 27th of July now, basically actually 26th of July, so that we can analyze the complete chart and go into that movement. So the 26th of July is basically on the daily chart. We had a massive bull push going to the upside, and looking at the candle structures around about here, we've got two major zones that I can see that I marked off, or most probably marked off. It was that specific resistance zone there that the market broke through, broke down again and broke through completely and didn't retest, as well as this one here on the market, that the market initially faked out and then went bearish from there. So I'm going to leave those two lines there and go down to the 4 hour to have a look at what the market did and just see the movement of this market. So we had this massive bull push trend that went up here all the way. So there was a lot of movement, bullish movement in the market here. And if I look at this trend on the 1 hour to see the formations of my ABCD patterns, I can start to see that there was a couple of ABCD patterns, but a lot of missed ABCD patterns as well. So if I get my path drawer quickly, and I take this one, move it up to that area there and move it back, I would not call that a significant enough pullback to complete an ABCD pattern. If I go to that one, and that one there, that was not a good enough support zone as well, or movement back. So going from that one to that one, skipping that one, going back up, and that one also did not get enough pullback on the market, and the market just completely moved up. Now in that case, what I would do is I would either just ignore the ABCD patterns, or I would patiently wait for it. It depends on what the market does. This instance, I probably ignored it because we started forming complete ABCD patterns here. Now, if I look at this one here and I go up to that one and bring it back down, that would have been a good enough pullback on the market, as well as going up there and back down there. That would have been a good enough ABCD pattern to play down, and then a movement up and not another enough pullback. So if I look at this movement here, my new ABCD pattern, seeing that we skipped that one, would have probably played out like from this area here at the bottom, a movement up, and then a wait for a pullback to come back down to either one of those two lines, so that we can get into a complete ABCD pattern and ride the trend up. So staying on the 1 hour and basically just playing out what the market did. As the market started moving and the market started moving down, it formed this bullish engulfing candle. Now I probably got in on this bullish engulfing candle because my buy area where I got in was on, let's have a look at what exactly where I bought. I forgot. It was at 14,815. So that's where I bought, just below the daily support level is where I got into a trade. So I obviously kept that line in my mind, and I waited for candle confirmations. Got a spinning top there on the 5-minute. That's what happened. So I got this nice consolidation area. It's a loss of momentum, and then a push down, and then a movement up, and we made a bullish engulfing with a spinning top, and I took the risk and got into a trade there and started following the market up for the pips that I bought. So it is basically just using the daily support level on that specific zone, waiting for the market to pull back, get some liquidity at the bottom, looking at these support zones. And when I started seeing the market losing momentum with this massive bear push down, I waited for confirmation at this area, so we can see support there, loss of momentum, and then a breakthrough, and then bullish engulfing that I saw. Okay, it's probably just a fake out at that specific area, and got into a trade. My stop loss obviously around about 350 pips, so around about that big. And when the market made that bullish engulfing with the spinning top, I decided, okay, it's time for me to enter the market, get into my buy, risk it, and go up and take my trade. So I got out of the market round about there. I think I actually got out because of a massive push down, so I got my support level. I kept that in mind, and I think there was a massive push down in the market that basically came and hit me out there, as you can see. So I moved up my stop loss into the market, into profit, keeping in mind all these specific areas here on the left, and waited for the market, but the market actually knocked me out. As you can see, the purple line support zone, my stop loss was there. The market hit me out, and then eventually retested that the second daily support line, and continued back up. Eventually, let me go to the 1 hour and trace it and see what happened. So that's basically how I took my trade, that specific trade, and how I hit the profits of that one. Trade number 2, I took a buy on the 6th of July around about 1931 at the price of 14,685, and I profited 1,240 pips. Now the weirdest thing just happened here. I actually went down to that time frame, specific time frame, and the market does not correlate with my MT4 account history, as I will show you now. But the blue line is marked off where I took my buy. So if I look on the daily time frame at this specific movement, the one thing that does catch my attention is the daily resistance zone that has just been broken. So I would have wanted to wait for a retest of that specific area, look at the candle confirmations on the lower time frames and the structure on the 1 hour to have a look if I can get into a nice ABCD pattern, buy and ride the trend up. Now going down to the 4 hour to have a look at what we've got here. We've got a bit of a consolidation zone and then a breakout of this consolidation zone, but not a retest on the 4 hour, neither on the 1 hour, and then basically just a movement up, a direct jump out of this specific area. So let's have a look at what the market did here. Okay, so the market started forming support there on the 1 hour time frame, and it seems like the market wants to form consolidation there. If we look at the way that the market is moving there, the candle structures at that specific zone. Okay, so that is what caught my attention at that specific area. So we've got this little 1 hour resistance zone that has been broken round about there, and we've got this daily support level below it. So if it does break down, we will most probably find support at that specific zone, this consolidation that has not been retested when the market broke out. But we started forming consolidation zones. And what does that basically mean? When it comes to consolidation zones and you're not quite sure what to do, just follow the trend. It's the most important thing, is follow the trend. So if the market went bullish into the consolidation and you don't know what to do, the most important thing is not to trade then. But if you really want to take a trade, or you want to get into a trade, you want to take the risk, stay with the momentum of the market, get in on the bottom of the consolidation zone and wait for it to break out and continue up to the top again. That is if you do want to take that risk. So marking off that specific zone, that's a bit of a support zone at the end of the day with the consolidation starting. So what I would have done is then wait for the market to come back down to the bottom of the consolidation or close to this little support zone of the consolidation and get into a buy and ride it up. Now if I take my profit loss calculator and I move it round about their stop loss. You all know I work on round about 350 pips and at least 900 pips of profit. Then I would say I profited 1,240 on this one. So that was about the size of the trade that I took at this specific one. And I probably waited for the market to come back down. I wouldn't have placed a buy limit because the stop or the daily support zone is too low. I would have wanted to enter manually on this one. So as the market went up, came back down. Okay, so that is what happened. Let's go down to the lower time frame, see what happened. Okay, so the market pushed down below that support zone, but made a bullish engulfing candle, and then started forming these wicks and made another nice bullish spinning top, bullish hammer, bearish hammer that didn't engulf the green. So I was like, okay, great, that's my perfect spot to get in and follow this consolidation with a bullish trend on the daily to go up further. So I probably got in manually here, round about here. Now my trade shows 1935, but as you can see on the chart, that was about 1840, and then the market started moving up. My TP was set at 14810. So let me just move it 14810 like that, like such, and then a continuation of the market up. Started forming a little, it took a bit of time to get to that specific area, and I do remember the market actually consolidating a bit more there. So let me go to the 1 hour and have a look at what the market does. Okay, so the market eventually hit my TP at 5 o'clock the next morning. So that was trade number 2. It was basically just following the trend of the market, forming a consolidation zone, waiting for the consolidation zone to come back down to the bottom, get in manually because our major support level is too low for my profit or my stop loss area to handle. So if the market went down more berries, I would have probably wanted to get in at a buy at that area, but the market actually came down, faked out at this specific support area, made a bullish engulfing on the lower time frames, and then a continuation. So that is why I got into this trade and followed this one up into profit. So yeah, trade number 2. Trade number 3 was hands down the stupidest trade I've ever taken. And there's a specific lesson that I want to teach in looking back at this specific trade. Now, if we look on the daily, we've got this massive bull trend going up and then 3 consecutive days going down in the market. But looking at the support and resistance zones we've got on the daily, if we mark off this specific zone here, and we've got a smaller support zone here, as you can clearly see, 1, 2, 3 candles, massive bull candle or bull momentum on that candle, and then a support zone here showing off this specific area as a support zone. Okay, now I'm going to leave it there for now, but I'm going to take it away soon. Okay, go down to the 4 hour to look at what the market does. Okay, now the blue line is obviously where my trade started. So looking at this specific area, we've got support there, as we can clearly see support, a retest of that area, and a movement up, and then a breakdown on the bear trend. And we closed off with a bullish engulfing candle on the 4 hour. Go down to the 1 hour, removing this box just for now so we don't clutter the chart on the analysis. You can see how close the market came to this daily area, but didn't touch it, but started forming a break of structure on the market. Now, what does that mean? Now, if we take our fib and we follow the ABCD patterns, if we take our fib from that specific area to this one, we've got this ABC, a complete ABCD pattern and a breakdown. Now, it can be confusing, and that is one of the specific things in my course that I teach, is how to not let ABCD patterns confuse you. Okay, now that was a complete ABCD pattern, and then we closed with these candles below the closure of those candles, so completing this ABCD pattern. And then the market actually went past that area. So this is a lower high, and then the market broke through it and then started consolidating. So what does that mean? It means that the ABCD pattern has shifted back into a bullish ABCD pattern, and then the market started consolidating like that. And what does that mean essentially is that we are turning the ABCD patterns around. We are looking at the trend of the market, and we need to start looking for a buy in the market and not a sell. And that is actually what I did. I sent out a video to my students, and I sent out a video into my open Telegram group where I showed that the market is going bullish again. We should start looking for buys again in the market. And I marked off a couple of spots in the market where we can look for buys. I think one of them was specifically marked off at 520, around about there. Let's say there. I'm not going to put it precise, but basically like that. So 14,520 was where I marked it off to look for buys. And I waited for the market to pull back. And in the massive push down that's coming into the market, so we consolidated, but keeping in mind that we still need for the wait for the ABCD pattern to complete, the market pushed down, and for some reason in my mind I switched my analysis and I decided let's go in for a sell, even though this buy was as clear as daylight. And I went into a sell at 583 and sent out the signal at 590, and the market actually entered everyone into a buy and then continued bullish, where I just should have kept to my analysis and said, well, the market has turned bullish. We have basically touched the support zone of the daily. It is a mostly bullish market, even though we've got 3 or 4 bearish candles on the daily. The majority of the candles at this stage is moving bullish. Get into that buy where the market shift its momentum. The market clearly shifted its momentum, and I got into sell where I should not have. And if I got into the buy as I originally planned and sent out the signal and the analysis to the open group on my Telegram, we all would have made a ton of profit. So what is the lesson to be learned on this specific one? Is stick to your analysis. It's something that I sometimes still struggle with, and a lot of traders struggle with, especially the more you get experience in the market, the more you get to understand the movement of the market. You get overconfident sometimes, and then you take shitty trades, if I can put it that way. You take stupid trades in the market, what you should not do. So stick to your analysis when you plan it out, when you analyze the charts. Stick to your analysis. Don't let anything take you off if you are sure with your analysis. Otherwise you're going to get confused the whole time and take dumb trades like I did on this one. Trade number 4, loss number 2. So looking on the daily of the 9th of July, the Friday, and then going to the Monday on the 12th of July, if I look at this specific area, we can clearly see that we formed resistance at this specific area around about there, and the market just closed above that area on Friday evening. Okay, so going down to the 4 hour to look at what the market did when the market started opening on Monday. The market basically mostly stayed above that resistance zone and played out a full bullish engulfing candle, and then another bullish candle moving away from that specific zone. And then the market started coming down and retesting this little support zone here at the bottom, and actually found its supports at that specific area and eventually just jumped away from it. So that was a stupid call that I made going into a sell roundabout there, because there was a break of the resistance zone and a retest of that resistance zone. So playing it back to where I got into the chart, going down to the 1 hour to look as to why I would have gotten into a sell, is because of this. I saw this playing out. The market formed that area, bearish engulfing there, and I was under the impression that the market is going to form a double top, and then we sell down and complete the double top, and looking for TP round about this area here. So that was what I did, but I forgot about what the daily did at this specific area. It was only a wick on the daily, and the bodies was the resistance zone that was being broken, retested on the lower time frames to continue for a buy up. So what the market did, it started forming this consolidation zone on top of the support and resistance zone, mostly fake down, bullish engulfing spinning top below the line, showing that it's forming more support at this area than resistance at this area, then a fake out, and then a breakout. And that fake out also got me to wanting to go into a sell, because it showed that there was a bit of bears in the market, but mostly it was bulls that was in the market playing around with the market, and then the market just jumped up. So I got into a sell because of this. I saw this bearish engulfing candle, and I saw this bit of resistance there and this spinning tops, and when the market started pushing down, I got into a manual sell and I wanted to drive it down. But what I forgot was, once again, the daily support level that was broken, retested. I should have literally just saw this area here as a support zone, consolidation, breakout of the consolidation, support zone, got into a buy there, stop loss 350 pips, so I would have been fine with that push down there and gotten into the buy to continue up. So what is the lesson in this one? Do not let the lower time frames confuse you from what the higher time frames are showing. The higher time frames always gives you more information and more accurate information of the market than the lower time frames. It's a story that I once told one of the guys that I spoke to, is look at the higher time frames as the parents of a household. The parents mostly makes the biggest decisions, as though the teenagers in the household, they make decisions here and there, but they don't have the final say. It's like when a mom is driving to the shop with the children. When they're in the shop, the children would want to take a chocolate, and sometimes succeeds with taking that chocolate, putting it into the basket, and mom pays for it. It's okay, let's let it go. But in most of the cases, it's still the mom deciding if that chocolate's going to be bought or not. And see the charts in the same way. The higher time frames is the parents, the lower time frames are the children and the teenagers. And do not let the teenagers decide the final decision for you. Let the higher time frames make the final decision, and follow then the structure of the higher time frames. In this case, it was by far a better entry to go into a buy than into a sell, because I let the teenagers confuse me, as though where the parents told me no, we are going out and we are going up. So yeah, that was the lesson on this one. It was an interesting looking back on the markets on the YouTube channel for the first time, looking back at what I did right, what I did wrong, and the lessons that I learned out of the charts. So let's get into analyzing the charts for the week ahead. So we closed off the week with a retest of the previous weekly minor resistance zone. So marking off that specific area like such, and having a look at what the weekly did. So the weekly basically came down, retested this area, and we should see a continuation to the top and more jet blacks going into the sky. Going down to the daily, look at what the daily did. The daily came down, retested this area, played around a bit in this area, so consolidated a little bit, and then another retest on Friday, making that a double bottom on the lower time frames, and we should see a continuation up. So marking off this area as well, this little one there, and then just to play it safe, we can mark off this area here as well on the daily time frame. So these two areas that needs to be respected as well on the daily, and obviously this area of the weekly also clearly showing the daily, playing around with that area. Okay, so double bottom on the daily time frame, and a continuation up, a break of this area, and then a continuation up. So if we look at this area here, we take our trend line and we mark it off. We had a nice break and retest of this area, and then a continuation down after this area basically formed a double top and went down. Okay, so what I'm seeing now for the week ahead is literally a breakout of this area here. We can see there's a lot of resistance there, so I'm expecting a breakout of this area, a retest of it, and then a continuation up. If not, we should not close above this purple line. As soon as the market closes above this purple line, we can expect the market to continue up. If we close below this line here, we can expect the market to continue down. On my lower time frames with specific stuff that I look at, I have noticed that the market do want to continue up at this stage. So depending on what happens on Monday, I am expecting the market to move mostly bullish for the coming week ahead. So we broke out with this bullish engulfing candle on the 4-hour. I'm expecting the market to play around here or just continue out of this area immediately, and then a retest of it, and then a continue up. So on the 1 hour, if we look at it this way, we've started forming nice ABCD patterns here for the market to continue up. Let me just put off the market or the magnet quickly. So it was a push up, a push down, a retest of this area. So we got a nice pullback, and then a continue up, a complete ABCD pattern playing out there. So the market is basically running on this ABCD pattern at this stage. So we can expect the market to come down, retest at some stage, and continue up on the lower time frames or breakouts, and we follow the market up with the fib as the market moves, and then wait for another retest on the fib, giving us a complete ABCD pattern. So it's easy on this one as well. This week was actually a bit more confusing than I expected it to be, especially with the momentum of the market moving here. That was basic, and then the week started playing around with us a little bit in this areas here. But I do expect the market to just continue up. Just keep in mind Friday is NFP, so we should expect some volatility in the market coming Thursday, and Friday is going to be volatile. If you do not know how to trade NFP, or you don't like to take risks in the market or high risks, do not trade while NFP is running. In South Africa, it's around about 1:30, 2:30. That NFP starts playing around with the markets in South Africa. So stay out of the market from around about 12 o'clock on Friday if you're scared of the risk. If you do understand how to trade with it and use your consolidation zones, use your support and resistance zones correctly before the market actually plays out into NFP, then you can trade and make some profits out of it. I know there's a lot of people that love trading while NFP is in the market, and some people that doesn't like to do it at all. I prefer not to trade in it myself, but sometimes I get a nice trade when I see the market is actually forming something specific. So this market, with the week that passed, the market was quite volatile with all the news that came out. There was a lot of manipulation in the market, especially here. It was around about here that the Amazon news came out, and Amazon did quite well. They did over 3 billion better than expected, or almost 3 billion better than expected, and the market actually just plummeted. So just keep in mind that the banks and the hedge funds, they love manipulating the market with big news events, especially with NFP. So just keep it in mind, just know what to expect. So yeah, I'm mostly expecting more bullish movement in the market, as all the time frames are agreeing with that at this stage. We did see this massive bearish push down on the 4-hour, and then here again, but we do have confirmation on the lower time frames that the market started moving bullish away from this support zone again. So yeah, let's see what the market holds for us this week. I'm looking forward to it. Once again, thank you for taking the time out to watch this video, analyzing the charts with me for the week ahead, as well as what happened in the past month. If you like the information that I shared with you, please be so kind to click on the like button, the subscribe button, as well as the bell notification to be notified when I upload more videos to YouTube. Also, if you want more information about rig trading and the courses that I offer, as well as the signals group, please go visit the website. It will be in the description down below. Everything you need will be there. I will see you all in the next one. Have a legendary week. Cheers.